How to calculate taxes or refund due. This is the first of a couple mini lessons on individual taxation. Okay, the first step is to calculate adjusted gross income. That is gross income minus adjustment. Second step is to calculate your taxable income. And this is the adjusted gross income minus the standard or itemized deduction minus exemptions. And the third step is to calculate the refund or tax due, and this is the taxable income times the federal income tax percentage minus any tax credits plus any other taxes minus payments. Okay, and here are the different categories of gross income, and those can come from wages, interest, dividends, tax refunds, alimony received, business income, capital gains or losses, IRA income, pension or annuity, rental income or loss, K-1 income or loss, unemployment compensation, Social Security benefits, and other income. And below, just for a reminder, is the formula to calculate the tax or refund due, just so you can see that it's gross income is the very first thing that you want to figure out when you're calculating your taxes. Okay, and adjustments. The adjustments include educator expenses, IRA, student loan interest expenses, tuition and fee deduction, health savings account, moving expenses, 1/2 of self-employment, FICA, self-employed health insurance, self-employed retirement, interest withdrawal penalty, and alimony paid. Okay, and here are some of the itemized deductions. Those are medical in excess of 7.5 of AGI. The AGI stands for adjusted gross income, and this basically means that if you only had 5% of your AGI was medical expenses, then you wouldn't get any of this deduction. However, if you had 10%, then you would be able to have a deduction of 2.5%. You would take the percentage that you used minus 7.5, and that would be the percentage that you can use for your medical expenses. And also there's state tax and local tax, and this is from income, sales, and property. Interest expense on home and investment. Charity, you can deduct up to 50% of your AGI. Casualty and theft in excess of 10% of AGI. Miscellaneous in excess of 2% of AGI. And other miscellaneous. Exemptions. There are two types of tax exemptions. They are personal exemptions and exemptions for dependents. In 2010, you could deduct $3,650 for each exemption. So an example would be if you're married and you have 2 kids and you file jointly, your exemption would be 4 times $3,650, which is $14,600.